Welcome back to Morning Markets on BNN Bloomberg. Thanks as always for being here. We're back with Scott Ladner. He's Chief Investment Officer at Horizon Investments, this time to talk about next week's U.S. election and the potential impacts to investors. Scott, thanks for sticking around. There's been a fair amount of talk about what could happen under a Donald Trump White House, and we'll get there in this conversation. Why don't we begin with Kamala Harris? I've read some of your notes. You believe, among other things, that retailers could get a bit of and retailing stocks could get a bit of a relief rally under a Kamala Harris victory. Why so?
Yeah, I mean, look, it's if you look at what the retailers have done, and if you look at sort of the history of how tariffs get implemented, yes, the consumer pays part of it, but it's also fairly clear that retailers basically take a little bit of a hit on margins as well. So they pass through some of the tariff to the end consumer. They don't pass through all of it. And so what we've seen over the last several weeks, especially as Trump's prediction market odds have been shooting up, is that retailers have been kind of taking it on the chin. And so I do think if you do get a Kamala win, if you get a Harris win in the presidency on Tuesday, I think you're going to see a pretty sharp, frankly, relief rally in some of these retail stocks that have just taken gotten some of the steam taken out of them lately.
You also think that she would be and we just finished talking about the big tech companies, marginally better for the large cap techs. Why so?
I think they understand her better, frankly. I think she'd have probably a little bit more predictable regulatory stance towards them, and so just overall, just removing some of the uncertainty that would be associated with how Trump tends to govern when he's in the White House. I just think a little bit more even-handed approach, a little bit more predictable approach on the regulatory front. If it were to be Harris, would probably end up helping them on the margin.
And what about economic growth, big picture economic growth?
So if you think about what the president can do, they can do some, but they can't do a ton. And so the way we actually try to assess economic impact and sort of market impact out of our presidency is by looking at three basic lenses. What can they do on the fiscal expansion side, obviously with Congress? What they can do on the tax side, which is related but somewhat distinct. Also with some congressional help, and also what do they do from the kind of the regulatory framework. And so if you look at a Harris presidency, frankly either presidency, you're going to get expansion on the fiscal side. They both want to spend more money. They both want to increase deficits. There's not really any plan to dial any of that back. So fiscal expansion is going to be basically similar, or at least a positive for both of them. If we're analyzing Harris, if we look at taxes, it's probably a small net negative. Some of the 2017 tax cuts will end up going away. It probably is a small drag on growth on the taxes side, and on the regulatory side, it's probably a zero. It's going to be a continuation of the Biden regulatory policies that we've seen. They probably are the most helpful, but at least they're a known thing, and it's not a new negative. It's just a continuation of existing policies. So overall, probably slightly good for nominal GDP growth, because we have positive fiscal expansion, small negative on the tax side, and probably no action on the regulatory front.
Okay, Donald Trump. There was quite a striking editorial in the Wall Street Journal within the past week or so on the effect that Trump tariffs, if he does raise tariffs, trade tariffs in a broad and significant way, the effect that would have on the U.S. economy would drive inflation, among other things, according to the editors of the Wall Street Journal. You've contemplated that question as well. You used the phrase, the potential for a ham-fisted application of tariffs. How likely do you think that is, and what would the impacts be to the U.S. economy?
Well, look, if we were to follow through on this sort of broad global, we're gonna treat everybody the same except for China kind of tariff policy. Yeah, that's why I did call it ham-fisted, because I think it is. I don't think there's any real logic. There's no state of the game. There's no game theory to it. There's no negotiating advantage to treating everybody the same. Applying sort of an across the board tariff to everybody, and it would be undoubtedly negative for the U.S. economy. It'd be negative for inflation. It'd be negative for growth. And you don't get anything out of it from a negotiating standpoint. And so, if we were to really follow through on something like that, that would counteract some of the good things that we'd be doing for the economy from the regulatory side and from the taxes side. But it's hard to figure out exactly what will happen if we were to get in the White House, because people do change how they act from how they campaign. But it is probably the biggest thing we'd have to keep our eyes on.
Okay, your view otherwise on fiscal spending in the Trump administration and tax policy?
Yeah, look, I mean, everybody knows, as I said earlier, both these folks want to spend more money. Trump probably wants to spend more, and he wants to at least maintain the tax cuts. So, we're not sure there's really the stomachs in Congress to have more tax cuts or additional tax cuts, expanded tax cuts. But at least the 2017 law would probably continue as it mostly were. And so, like slight additional relief on taxes. Probably even more spending than a Harris campaign or Harris presidency would bring us, and he would bring back the deregulatory push, and that is very helpful, especially for small businesses. The regulatory side we think is the hardest to measure, but possibly the most impactful, especially for the small companies part of the equation. And so that those parts would be generally positive for positive for nominal growth, which means stocks good, bonds bad. Again, could be counteracted by really terrible tariff policy. Remains to be seen.